Huw, thanks for joining us. Is this a case of be careful what you wish for, Mr. President?
Thanks, Wilfred. Well, look, my focus has been very much looking at Europe and Japan and ahead of what is a really huge day in Europe with the ECB's and Mario Draghi's last decision day. And so I've been really focusing on at what point will cutting interest rates more negative in Europe potentially do more harm than good. And for me, that's a hugely difficult debate that they're weighing up. I teamed up with an academic at the London School of Economics because there's so little research on this area. And I think that's one of the challenges for many of your listeners in the States. There's really not very good academic work in this area because we haven't gone through this Alice in the Looking Glass type territory before.
Your take of your recent op-ed was that further cuts for the ECB from here start to do more harm than good. Is that right?
Yeah, no, very much, Wilfred. I mean, that's my bottom line is I'm beginning to worry about what the impact is. You know, we can learn from Japan that take Japanese regional banks. They are some of the least profitable banks on the planet because of a long duration of negative rates. And what's special about the Eurozone is about 70% of lending to companies comes from the banks. And so we really need to focus with a laser on what it means for the banks. And the kind of bottom line for us was, you know, unconventional policy like negative rates is a bit like taking steroids. They're great in short dosages, but long-term usage starts to weaken your bones and makes you more prone to an accident. And in the same way, I'm worried about the financial system and what that means for the transmission of credit in Europe. So we come out of it, you know, very cautious and hope that the ECB is weighing these difficult decisions incredibly carefully.
So, Huw, what do you think the ECB will do when they make their decision, and what should they do when you put all this together?
Well, look, you know, market expectations, as you know, Connie, are in the order of 10 to 20 basis points for tomorrow, with another 10 in December. And I think the median is looking for about another 35 basis points off. So going from minus 40 to minus 75 by Q1 next year. You know, the basis of the work I've done with the London School of Economics professor is that's not a great move if what you're trying to do is jolt and kickstart the economy with more flow of credit. To try and offset that, we think that they might introduce a tiering scheme to offset some of the challenges. But that really does play back into this debate about the currency. When the Danes and the Swedes did this, it was explicitly to try and protect their banks and obviously weaken their currency. And that's something which obviously in this current environment is very politically challenging. But that's what consensus expects. And then third is a potential move to change forward guidance and potentially, although I think it's a really finely balanced call, to restart QE. So I think this is my view is it's probably better not to cut at this stage. But certainly I think there's 100% of the market are expecting a cut. So they will be very surprised if they don't.
Huw, thanks for joining us. Great to see you. Huw Van Steenis from UBS.